Before we get started, we'd like to thank Allianz Trade for sponsoring this episode of Let's Get Surety. Allianz Trade is the trademark used to designate a range of services provided by Euler Hermes. Euler Hermes is the global leader in trade credit insurance and a recognized specialist in the areas of surety, collections, structured trade credit, and political risk. For more information on Allianz Trade, Surety, visit their website referenced in the description. Now, on to our show.
You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks so much for joining us for this episode of Let's Get Surety. I have with me today my co-host, Mark McCallum. Thanks for being on with me today, Mark.
Absolutely. Hey, Kat, we're back.
We're back, and it's always good to have you on as a co-host.
Thanks. I'm looking forward to the discussion.
I am too. We're going to be talking about international surety, domestic international,
Awesome.
And then international opportunities. So to do that, we have with us Paul McIntyre, Vice President of Surety Canada with Allianz Trade.
Hi, Kat.
Thanks for being
Good
on,
to be
Paul.
here.
Yeah.
Thanks for having us.
And we also have Nick Verna, Regional Head of Surety and Guarantee Americas with Allianz Trade. Thanks for being on, Nick.
Hi, thank you for having me.
Well, before we dive into the topic, if you could each just tell us a little bit about yourselves, how you got into surety, and a little bit about Allianz Trade.
Sure. I can go, Nick.
Sure.
So my name is Paul McIntyre, as Kat introduced me. I've been in surety, I guess about 23 to 25 years now, and probably like a lot of Canadian surety underwriters, I fell backwards into surety. I have a finance background. I have a commerce background. I had a bit of leasing background, lease financing background. I was playing hockey with a good friend of mine who was employed in the surety industry, and he indicated, Paul, there's an opening at his company. I had a finance background. Would I be interested? My first answer was, what's surety? I had a question back to him. And he went in to explain it to me. I went in, I interviewed for the job. I was successful. I got the job. And I've been in it ever since. It's a great career for anybody who's thinking about a career in surety. It's very well-rounded. There's a finance background. There's a marketing background. There's a sales aspect to it. It's really been a fulfilling career for me as far as being something that I didn't know about, but ultimately being something that I've really enjoyed doing. That's
terrific. I think that's the first career story we've heard that originated in hockey. So that's pretty awesome. Yeah. that's very Canadian. Yes. How about you, Nick?
Well, I started in surety a little over 27 years ago. Trainee at Allianz in Philadelphia, so it was a local shop, big footprint across the country. Really learned a lot about different lines. At that time, they made you learn sort of everything. You needed to know contract surety, needed to learn fidelity, and they didn't even call it commercial back then. They called it non-contract surety. So it was it required you just to learn everything about it from the ground up. So really got immersed into it. Really enjoyed it. Sort of went back and forth over the years between commercial surety and contract surety, never really staying in one more than the other. And then over the last few years, just sort of got into the building surety phases for companies that wanted to grow surety operations here in the U.S. And that's been a lot of fun. And Allianz Trade has been a great company for really supporting the build out process here in the Americas region.
Well, and everyone might not know who Allianz is. You guys just took over Euler Hermes, is that correct?
Well, it's not quite a takeover.
Oh, sorry, wrong
word. Euler Hermes has written surety for well over 100 years globally. They're one of the largest writers of surety in the world, and one of the largest writers of surety outside of North America. Euler Hermes has been owned by Allianz for nearly 25 years. Just never took the corporate name, if you will.
Okay.
So, no, we were excited, this year to finally take the Allianz name and become Allianz Trade. We feel it's a good match. We've always had the support Allianz, but now utilizing the name just connects us with a lot of the sort of the global capabilities of the company, and really shows without any doubt the commitment of the overall organization.
That's terrific, and it's good to let everyone know since it's a fairly recent change.
Yes, March.
Yeah.
Yeah, Paul, why don't you talk a little bit about our capabilities throughout Canada?
So we've set up in Canada probably around the same time that we set up actually writing business in North America.
Okay.
So probably about 7 years writing direct business in Canada. We have the ability to write on the ground contractors in Canada, and also north-south coming from the U.S., and also the capability to write international contractors coming into Canada. Canada is probably one of the largest, fastest growing construction industries worldwide, and it has become very attractive to international contractors in the last 15 years. And as a result, with the relationships that Euler has in the European market and growing in south of the border, we've been able to support the contractors as they come to Canada with the bond requirements that they need.
That's terrific. And you manage the whole Americas, is that correct, Nick?
That's correct, right. So our Americas region encompasses Canada, the United States, and Brazil. We have a team in São Paulo that's responsible for underwriting business in that region, but all throughout the rest of Latin America, we have a joint venture with MAFRE called Sol Union, and Sol Union operates in all the Spanish-speaking countries of the rest of Latin America. That's not Brazil, and from there we're able to place bonds throughout the entire region. So it's a nice footprint to have, and a great relationship that we have with MAFRE in that sense.
So we heard a little bit about the Canadian market. Mm-hmm. Tell us about the Brazilian market.
Sure. Well, the Brazilian market has undergone some changes over the last few years. It's had some political turmoil and some economic turmoil, which has caused some dislocation of various industries. We're seeing some stability. We mainly operate in the court bond realm there at the current time. We write a good number of sort of tax appeal bonds and those types of obligations. We do write some construction and some operate and maintain type facilities there, but there's not a lot of stability in that portion of the market at the moment. But we're expecting post-election later this year to hopefully see some continued growth in that market.
And what other opportunities do you see in South America beyond the Brazilian market?
Yeah, South America is it's a large area for global companies to operate in. So we're not as Allianz Trade really targeting companies that are based in any of the other countries outside of Brazil. However, we have a significant number of multinational corporations throughout the United States, Canada, and Europe that want to operate in those countries. So our Sol Union footprint allows us to provide the capacity that they need to be able to operate throughout all of Latin America. Yeah.
So now you had mentioned in Canada that you were very good at servicing companies that want to have a footprint in both Canada and the U.S. Can you kind of acquaint us with some of the special considerations that come with that cross-border business?
Yeah, sure. Well, it's partially the ability to have relationships with the local brokers to gain their trust and to underwrite the account locally. And then also have the support of Nick's group into the U.S. marketplace to underwrite the locations, to underwrite the contracts, to underwrite the bonds locally.
So, we're kind of used to thinking about surety from a U.S. perspective, but we know that surety takes different forms and shapes throughout the world. And where we might think of, the general custom is to have 100% performance and payment bond, that may not be the case in every country. Could you talk about kind of some of the variations you see out there and how surety internationally can be very different from that experience in the U.S.?
Sure. Well, Paul, why don't you first talk a little bit about the types of bonds you see in Canada, with not being the 100% that typically see in the U.S. market?
Yeah, sure, Nick. Our most common bond in Canada would be a 50-50. Okay. It would be very similar wording to the U.S. bonds as far as being conditional, but being on a 50-50 basis. There is still demand for 100-100 bonds in Canada, but it's less frequent. The more common bond is a 50-50 bond. That's the primary difference. They're conditional in nature, similar to the U.S. Wordings are very similar cross-border. Not identical, but we have a CCDC bond form, which is kind of the overarching standard in Canada.
Would you tell us about that acronym for those who may not be familiar?
What is it? The Canadian I'll probably butcher it. Canadian Construction Document Committee, I think, is the CCDC. Yeah. I don't think I've ever thought about the whole acronym.
Yeah. For those not familiar, it's kind of like the AIA version of forms, but in Canada, right?
Yeah, definitely. Yeah. And along those lines, SAC, the Surety Association of Canada, has also been active in developing its own bond forms, in reaction to further support the marketplace and the demands of the marketplace for more a prompt response and also a more clearly defined claims process when they do get into the claims process.
Now, you talked about 50-50. Now, is that by regulation in Canada? Is that specified by the provinces or other public owners? Why 50-50 and why not another percentage?
That's a great question, Mark. Why 50-50? Probably 50-50. Bonds are not required legally in Canada until recently. Recently, that's the caveat, and that's why it's such a great question because it's a constantly changing climate in Canada with regards to the requirement for bonds. Bonds primarily were a policy. It was a government policy to take bonds in order to mitigate the risk because it wasn't the government's money. It was taxpayers' money that was being spent. So they wanted it to be spent wisely. So they decided a good policy to have in place was the provision of bonds to guarantee the performance. How it went from 100-100, because we are very closely tied with the U.S. market, to 50-50. I don't know the answer to that, what specifically why. It may have been a consideration of cost. It may have been a consideration of PML. And at some point, somebody decided maybe we don't need the whole coverage. We can get away with the 50% coverage. There's arguments for both sides. There's been situations where a 50% performance bond wasn't enough, 50% L&M bond wasn't enough. But that aside, the decision was made, and that's the predominant bond that's called for in Canada. And then to expand on that, as far as you were asking about why is it required? Up until recently, in the last couple of years, the government of Ontario has revised their lien legislation that now requires that a 50-50 bond is put in place for all projects that are government sponsored in the province of Ontario. New Brunswick has followed suit most recently. All provinces are looking at it on a broader scale. There have been some decisions that have gone our way, other decisions that haven't gone our way. There has definitely been revisions to the Lien Act in order. It's really prompt payment that's driving this. The sub-trades need to get paid and
are they pushing for these laws to be made in the provinces then, the sub-trade organizations?
Yeah, I would say it probably started at grassroots there and then expanded out into the whole marketplace. So we've had two victories that I know of. Absolutely, there's ongoing review of lien litigation in the other provinces, and I'm not sure exactly where they are at this point in time, but I do know that New Brunswick has gone bonds and Ontario has gone bonds.
That's terrific.
Yeah.
So we talked about them being what we'd expect, kind of conditional obligations there, and we're talking about performance and payment bonds. In Canada, are bid bonds a component, or they call them tender bonds? Is that a component of the construction marketplace in Canada?
Very much so. Yeah. Yeah, it's a very similar process. Bid bonds are required in order to qualify for the project. It's a requirement of the tender specs. And then when they open the bids, they decide on who this is. There's also the pre-qualification stage, which is becoming more prominent too.
Right.
So a pre-qualification so that the owner can narrow down the qualified tenderers. And then at the next stage would be the bid stage, and then similar to the U.S.
So, Nick, do you see, are they always conditional, obligations elsewhere in the Americas, or do you see a different kind of form of surety bond?
Yeah, we tend to see a different kind of form throughout the rest of Latin America and for around most of the rest of the globe. It tends to be a 10% unconditional guarantee, where it's a performance bond. It's performance triggered, failure of performance, but the remedy is payment. That's typically the remedy that the surety has. In many markets, sureties are further joined by banks in offering similar types of coverages. So you have banks that provide bank guarantees, and sureties provide surety guarantees. So it's sort of a blended market in that sense, depending on where you're at. For our company at Allianz Trade, we sort of have come in from the other direction, right? Our historical operations have always operated in the European marketplace, into the Asian marketplace, and into Latin America with a strong knowledge of that 10% unconditional guarantee. Coming into the United States and Canada specifically became sort of the conditional obligations that we are all familiar with. But with that also came the 50% and 100% performance and payment bonds, which was a bit of an eye opener for many of our European colleagues. They see that as 10 times larger than what they're used to putting out for a similar sized project. But Paul mentioned earlier the PML aspect of the bond. And what we truly see is that down to the specifics I won't get into, but for the most part, a 10% bond has very similar outcomes to that of a 100% performance and payment bond in the event of a default type scenario. It's a type where the surety can mitigate its losses. It can replace contractors. It can fund projects. It can do all sorts of things. And in the grand scheme of things, we see a similarity in the actual expense costs of a 10% bond versus that of a 100% performance and payment bond.
That's interesting. It seems like such a jump from 10 to 100, and that you would see that similarity is very interesting.
Yeah, it creates, we at Allianz Trade work with a lot of multinational corporations, those that are based in other countries looking for bonding in other parts of the world. And what we often have is we'll have companies that have facilities bonding programs that are set up for their European 10% needs, and then they need a bond in the U.S. or Canada marketplace, and the sheer penal sum of that bond can present to be a large portion of their overall program because their program was set up assuming a 10% bond need. So it does create some ways that we need to make sure we look at risks in a multinational situation, that we're understanding where the bonds are, what type of bonds are needed, and how we're looking at their overall exposure numbers.
I'm really fascinated by your comment about you talked about the European underwriters and all of a sudden looking at a business a certain way, and then in Canada, I'm making the assumption, and you can correct me, is your underwriting is very similar to what we'd expect in the U.S. But different countries, you have different ways that they do their accounting and how they look at the financials. Is that something that's more pronounced in Latin America and in Europe? How they're looking at it, and how do you deal with that when you're dealing with multinational situations?
Sure. I mean, I'll touch on it.
It's kind of a big question, Brad. Yeah.
Yeah, I think years ago when we looked at international type needs, we often were confronted with very different accounting standards between what we were used to in, I'll say specifically in the U.S. accounting standards versus other parts of the world. Over the years, the U.S. accounting standards have changed internationally, and they've been moving towards more of a common. There's still differences. There's still some differences globally, but it's a lot easier to look at accounting statements from around the world on a more consistent basis now. And specifically within our company, we benefit by having offices around the globe, people in those regions that are familiar with underwriting and analyzing local financial statements. So, Paul and I don't need to underwrite a Turkish financial statement. We have a Turkish operation that reviews and does that, and that's that way in many, many countries. So it does help that there's some standard capabilities, but also that we have the local capabilities that can assist us with that.
Yeah, I would just expand on that too.
Yeah.
The head of our surety group, Shamapande, is ultimately an American who was trained as an underwriter here in the U.S. and then now resides in the U.K. and heads up our surety group. And he's very much in tune with the 100 bonds. And there can be a shock and awe when you go from 10 to 100.
Yeah.
But the surety group itself has made great efforts with the support of Sean to understand that the PML, the underwriting process in North America are a little bit different than the underwriting processes in the rest of Europe, and has been very supportive in looking at larger programs where you might have a very large contractor that has a $500 million program in Europe, which equates to maybe a $5 billion program in North America. In order for us to offer significant capacity to that contractor here in North America, we need the support from the group surety to understand that, putting out another $1.5 billion on a contractor that has $500 million is not quadrupling the program per se. It's offering support that's comparable to like $150 million in Europe if you take the 10% scenario in its simplest form. It's more complicated than that, but in simple terms, that's one way to look at it. And like I said, the group surety has been very supportive in trying to understanding that and offering support to us here in North America on the larger programs. It wasn't that way from day one, but it's definitely progressed dramatically.
Yeah. Well, they probably have to change the perspective to see it that way.
Yeah, it's nice to see a 100-year operation still be flexible and make adjustments to in the areas that they want to grow. And they want to grow in North America, and there's a need to adapt to North American underwriting styles, North American needs. So it's very, very nice to see that level of support that we get from our group operations.
The other thing I'm very curious about, we talked about the different underwriting styles. Obviously, the legal systems are very different, and I'm curious as how that filters into your decision making, knowing that the legal systems in the different countries are so dramatically different sometimes.
Sure. I'll just say, one of the benefits of working for a large organization, and Allianz as a whole is 149,000 employees. So there's a lot of people there. Allianz Trade is about 5,500 employees. Now, granted, we're in many different lines, but what that affords us is the ability to have a sizable research staff and those capable of looking at not only legal but economic and sanction type implications in all these countries around the world. What that gives Paul and I are tools where we can look and we can say, okay, this country, maybe has some sanctions issues. We need to be careful if we're going to be looking at companies in that country. This country maybe has some economic issues, and we have to, proceed with caution, knowing that there's these overhangs. So we don't need to recreate the wheel every time we look at a company. We can go to our resources and our research tools and have sort of a country-specific blueprint, if you will, of what to expect if looking at. Then on top of that, we have our local resources. So, I'll use Turkey again as an example. If we have, a question about a company operating in Turkey, we can speak to our Turkish counterparts, and they can provide us with the details of what that business is, what that sector's like. But then, the indemnity type questions, pose some challenges, but ones again that we've sort of found a way to operate, through working with our local resources and in what's necessary to capture the indemnity of the company in that country, but then also using our council resources here in the Americas to say what's necessary to secure that indemnity in Canada, what's necessary to secure that indemnity in the U.S., and coming up with a blended indemnity program that supports global needs.
That's interesting.
So, in terms of opportunities that you see going forward for international surety, how would you describe the short term and then maybe taking a look at the longer term opportunities? Paul?
Yeah, I'll just say Paul is in charge of our multinational corporation initiatives here in North America. So he's definitely got his pulse on that area. So definitely an individual can provide some answers there.
Yeah, Mark. So the multinational corporation as an initiative is relatively new. Allianz Trade as a company does have multiple international contractors that they currently support, and maybe not to the full extent that we can. And the intention of this new initiative is to be able to expand that and to be able to offer multinational services to these companies and to new companies around the globe. We're located in excess of 23 countries directly, and then we also have fronting capabilities in multiple countries beyond that. That's a great proposition to our customers, and the intention is to expand on that dramatically in the next 6 to 18 months. Like I said, it is something that is somewhat in its infancy. We do currently support multinationals, and the intention is to expand on the support that we can offer to those multinationals, and then also use it as a proposition to other potential accounts out there.
It's terrific. I mean, I think we got a lot of information from both of you about international surety, both domestic and beyond. I just wanted to say, if someone was thinking about getting it or helping a client who needed to get into another country or get bonded in another country, what advice would you give them as a bond producer working with a client?
Sure.
Yeah.
No, I was just going to say, definitely work with an NASBP agent. I mean, they have the resources, they have the capabilities. We work with brokers that have placed global bonds. We've worked with brokers that this is their first opportunity, and we provide every piece of resource we can. But I'll just say, the helpful piece is to really understand that company's capabilities. If they've had, if it's a reverse flow business, understanding what country they're coming from, what the background of the country is, what the financial strength of those companies are. If it's a bond placement overseas for a U.S. or Canadian company, understanding their capabilities. Have they worked overseas before? Do they know what's necessary to get labor, materials, and contracts in place in those foreign locales? And then of course you have international bonds that aren't quite international bonds, right? You have bonds that run to the U.S. federal government, for example, for work overseas, and the contract says Maryland on it, and the contracting officer may be sitting here in the U.S. Right. Yep. But the work is taking place, outside of U.S. soil, so it can present logistical challenges there as well. Yeah. So it's not always easy just to say, oh well, this is a U.S. contract. Yeah, it's a U.S. contract that helps us understand the law, but it doesn't necessarily mean that the work is going to be the same as if they're working right down the street from here in California. So
that contractor would definitely need different capabilities than one working just down the street.
Right. Yeah, and Paul works with quite a few accounts that have very large geographic footprints, and will often present locations that may be new to them. So it takes a little bit of work to for us to understand if they've worked there before, what their capabilities are, and then for us to be able to provide what our capabilities are in that country, and what whether bonds are accepted or whether there's a need to use a bank fronted letter of credit, for example, in some countries where bonds aren't accepted.
Yeah, Allianz Trade has invested a lot of time and effort in understanding the locales that they do operate in, and it's a great resource for me to use when speaking to our brokers about our capabilities to service Canadian contractors that are working internationally. And it's been a success story for us as the Canadian branch of Allianz Trade, and we hope to expand it going forward.
That's terrific. Well, I just want to thank you both for being on with us this afternoon. It's been great chatting with you about international surety. Hopefully we can have you on again, and this isn't just a one-time deal.
You've been listening to Let's Get Surety. Let me hear your bonding talk. Brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.
Before we go, we just want to thank Allianz Trade again for their generous support in sponsoring this episode of Let's Get Surety. Allianz Trade is the trademark used to designate a range of services provided by Euler Hermes. Euler Hermes is the global leader in trade credit insurance and recognized specialist in the areas of surety, collections, structured trade credit, and political risk. For more information on Allianz Trade Surety, visit their website, referenced in the description.